Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Today is the day. Federal Reserve press conference today, 2 p.m. Eastern time. And you know, I don't actually think anything interesting is going to happen. I think the Federal Reserve is going to continue to tell us the same things that they were telling us 3 weeks ago. But we'll see. In the meantime, there's probably going to be all sorts of crazy stuff going on. So, to the charts. Volume profile, let's see where we're at. Well, we had an okay day yesterday, and then they just like totally sold into the close. And now in the overnight, we're up. Things overall are looking pretty constructive. Like right now, this is looking like market panic for no reason. Like there's like no news for all of this. It's just kind of funny. Okay, treasuries kind of where they were. Again, we see like this late day sell. Okay, so a little bit of movement in the overnight move. Oil is looking awfully nice. Like when it was at 83, I was like, oh yeah, that's great. Hey, maybe we could get 80. Nah, probably not. Well, right back up to those highs. Now we do have oil stocks today, so you know, I've kind of been waiting for that in the Federal Reserve, and then I don't know, maybe we get into oil. Natural gas is having another little rise here too. You gotta watch out. That one could just explode any day now. It's probably might be worth looking at the options in natural gas, although probably not today. But I should have thought about that one earlier. Now, gold and silver. Gold finally got the nod from Goldman Sachs analysts, so maybe now is the time to buy gold. I don't know. It's I have to say, this trend up here is looking mighty constructive, but we kind of fought the same thing back here, right? So, well, and silver is just kind of in its range. I think silver could make another, they could bounce back up there quite easily. And what about copper? Copper is up as well. So I've been a little concerned about our friends over in copper, but it kind of looks like they're saying, like the rest of the markets, it's nothing. It's nothing. Let's move up. And what about the Bitcoins? Well, Bitcoin is up at 3,700 now. Well, I would be concerned about resistance at 40K, but hey, it doesn't matter. Like, I can't predict that it's going to bounce off of that or not. I just know that's kind of a spot that a bunch of people are going to be thinking about. And the chances are really that we come back above 40K and then we failed to get above 45 and then we push back down. Like they might screw around with this for a really long time. Just okay. And what about the dollar? The dollar looking strong this morning, up above 96 still. It's been. I don't think that the dollar should be so strong as it is, but we've been having this little market panic. So, but again, I don't think the Federal Reserve is going to say anything all that interesting today. So, I don't know. We'll see what happens, but I think there could be like a ton of trade and all sorts of weird behavior today, but then the meeting happens and Powell is just like, I don't get what your guys' deal is. Nothing's changed. That's what I think is going to be. The March meeting could be more important because, well, I mean, of course it's going to be more important. This is when we expect to see a rate hike, but there's going to be a lot of economic data between here and there. And it's going to be all of that economic data that we're worried about. Like right now, we don't have enough data to know that something's wrong. We just have some data to suggest that something could be wrong, right? But we don't know how big of a deal it is or if it's really a problem, right? By March, we'll know. And so what they say in the March meeting is probably going to be a lot more instructive. And who knows? Maybe they back off in March and they don't do it till June if we're really getting a slowdown by that point, right? So that's kind of where we're at. Oh man, I've been thinking. So I have in my head. I don't know why I've been thinking about this all morning, but yesterday I put together because you guys were talking about doing the stock market influencer tier list. So like I put everything together for the influencer tier list, but I don't think I want to do it right now. I mean, it's a lot of drama for one thing. Not that I would say anything bad about any of these people, but all in fun. But I think I want to get these other videos out first. So maybe it makes more sense to do it in March. So I think that's what I'm going to do is I'm going to do it in after like the March FOMC meeting. Then we'll do the social media influencer tier list, which should be fun. But I don't really want to do it today. But it's going through my head. I can't get it out. Did Elon Musk sell his shares because of his Twitter meets or because of the upcoming quarter for Tesla? No, he sold his shares because Twitter told him to, right? Remember? Should I sell 10% of my shares? And Twitter was like, yes, you should. And so he did. And I kind of wonder. So the thing I wonder is what the people that voted yes, what were they thinking? Were they Tesla shareholders? I hope not. If you were a Tesla shareholder and you voted yes in that poll, shame on you. Shame. You haven't been listening to this stream. You misunderstood. You didn't get the thing that you were supposed to learn from listening to Speculator Seth, because you should have known that Elon Musk selling 10% of his shares would be a really big hit to the stock, one that could potentially mark an all-time high, and it's going to hurt your shares. Better get out in front of it. But nope. But I think that they did it because they thought you're too rich, I don't know. You're too rich. We want you to pay the taxes on it. It's also really interesting to listen to Elon Musk talk about it, like he did that interview with I don't remember the name of that podcast, but he did an interview with that podcast. He went off on Elizabeth Warren. He was like, she's calling me a freeloader, but here I am about to pay more tax than any one individual has ever. And she works, her salary is paid by the government and she doesn't pay any taxes. It's absolutely, I agree with him. It's absolutely ridiculous. Good morning, Vietnam. Today, I don't know, man. Will today, because of the last 2 days, will the volatility contract significantly up until the FOMC meeting? I'm worried that might happen. I'm seeing a decent amount of activity over in the ES, though. Seeing a decent amount of activity, but it's not enough. It's not enough. We still might be prone to the volatility just completely contracting and disappearing until the meeting, because everybody like the market is anticipating this particular event too much, right? I mean, I get it, but I don't think that the economic situation here's what I think is going on. Okay, I don't think that the economic situation between today and before Christmas has changed at all. So there was this great rally in Christmas and or at the end of the year, and then the beginning of the year came and the bonds started selling super hard. Now, why did the bonds sell super hard at the beginning of the year? Why didn't they do it in December? Well, here's why. Here's why I think, at least. There are a lot of funds and primary dealers that do business in interest rates at the beginning of the year. It's the busiest time of year for them, okay? And they're buying a lot of inventory at the beginning of the year. So all of this, sell side demand that was going to come through, it was always slated to come through here at the beginning of the year. I thought they were going to wait a little bit. I didn't think they were going to do it on the first day, so I kind of missed the boat on that one, right? Error on my part. I just wasn't in the mental, but part of it was I just wasn't in the mental space I thought to make a trade like that. But anyways, So it happened because of liquidity concerns, is what we usually call it, right? It was because of liquidity demands, right? When that happened, finally the stock market had to live up to the reality that interest rates were going to change. And because that happened, it triggers all of these other things. And now all these algorithms are doing stuff. And so here you got stuff like on Monday, where after all of the protection expires and everything, you get all of these big funds having to do all of this crazy sort of stuff. And it's just that the market is working itself up at that point. There's no reason for it to be moving per se, right? It's just the market moving because the market moved. And all of these guys, these are like price insensitive buyers and sellers that have to do things because of the way that their business works. And they're not necessarily executing in an efficient, let's say not efficient, but an informed way. There's no informational content behind their trades, right? So that's why you got all of this behavior that we've had. And because of that, the retail side has really got itself worked up, especially because the retail side got absolutely crushed in Bitcoin. I tried to warn people. I didn't explicitly say sell. Bitcoin's going to sell from December to January, but yeah, I told them, no, don't think there's a chance that we could sell in December. That's what I said, right? Well, now you got all these retail guys that are down 50% on their cryptocurrency stuff, and they're seeing volatility in the stock market, so they're all super scared. So they're, of course, looking really heavily to what's going to happen in this FOMC. But if you've been sticking to I'm an informed trader and I want to know what's going on in the market, and I want to know if a move is based on liquidity concerns or whether it's based on fundamental news or whatever I can find to explain particular moves, then you're going to come in and you're going to look, well, nothing has actually changed. And this is all just, liquidity concerns. So Federal Reserve is probably not likely to surprise anybody today, right? Good morning, Kath Guda. Was Monday's rally really coinciding with untold billions of put selling? Is that factual? That's what the internet wants me to think. Okay, so it is true that somebody came in and sold a bunch of puts. Was that completely responsible for the rally that we had? I don't know. The problem is that there's not really very good retail tools to look at that sort of a thing. You kind of have to look at that sort of stuff with models to some extent, right? But it does look like that was a big part of why they moved. But again, like I'm saying, like all of this, the down move that we had was also because of options, right? There doesn't appear to have been any informational content behind any of this volatility this week. Yeah. Could you imagine taking payment last year for a house in Bitcoin just to have Bitcoin sell off like this? Crypto is a fairy tale. Oh, imagine taking payment for a house. Yeah. Now all of a sudden, well, if it depends on what what you were anchored to. If it was I pay X Bitcoin, I pay 0.1 Bitcoin a month or whatever it is, or I pay X dollars in Bitcoin a month. If you chose the former, then you're dumb, right? Because you know that Bitcoin could go up, and maybe not dumb, but you're taking really significant risk, right? The number of puts seems extraordinarily beyond the capability of most funds, according to info being circulated. I don't know how much it is. I would like to know how much in margin was necessary for that to happen. I would like to know who it was, but I don't know if we'll ever find out. I don't know if we'll ever find out. I don't know if I'm going to take a trade for FOMC, to be honest with you, NASDAQ Killer. I don't think that anything crazy is going to happen. Listen, if I'm sitting there and they say surprise rate increase, then I'm coming in here and I'm market buying whatever's in there. But I don't think that that's going to happen. But yeah, I need to know the number of those puts. Because I mean, the whole thing is the conspiracy theory is that it was the plunge protection team, right? But it could have just been a fund or a number of funds. Seeing what was happening was a little bit crazy, and seeing that the volatility was getting excessive and deciding to sell options because of it. It's a risky. I got to tell you, it's a risky trade, right? Like if the like say Jerome Powell comes out today and raises interest rates, which again, highly unlikely. Highly unlikely. Oh, this is a weird thing. I've been reading Taleb's books, and I don't know. I feel like a lot of what he says is too specific to options. Because like especially he's talking about a function. He's like, we care a little bit more about the function on the f of x than we do x itself. So x is like the underlying stock, and the function is like the option strategy that we're playing with it. And I guess his whole point is that you want to deal with the convexity of the trade. So how much money you make when you do get a fat tail, when you get an unexpected measurement in x that the market doesn't expect, then you want your option strategy to pay out big time. And that's where you get these things where like the further away it goes, the more the delta is, the more that your option increases for an increase in the price, right? This is convexity as he talks about it. And in futures, you don't get that. All you can do is you've got a linear line. The price of the underlying move gives you so much per tick, and that's it. And you can choose to go long or you can choose to go short. And so you can't get like this convexity or any of those sorts of things. Why was I talking about that? Is he made millions of dollars trading options, dude. He made millions of dollars trading it. And he has some really good points, but I don't know if it's going to help you scalping futures, unfortunately. So the issue is kind of that we look at this and we're like, okay, there's a range of possibilities of what's going to happen, and like, what is the probability that this is going to happen and this is going to happen? Like, I can talk about what is the probability that Jerome Powell is going to raise interest rates, right? But the reality is that Jerome Powell is not a random variable, right? What he's going to do today is already set in stone. We don't know what it's going to be, but it's already set in stone, right? There are some things that appear in the universe that, at least to me, appear to be truly random. So, for instance, if you take like an arm and you attach it to a piece of wood, and you put a pivot in it so that it can spin around, but then at the end of those you also put these other arms that spin, and so you kind of get this little arm that you've seen those things where they like swing around and stuff. And the scientists, they were doing this at my university. They go and they say, okay, can we predict how it's going to go? Because it appears to be completely random to us. And they've done all sorts of crazy research to try and see, okay, it's just we don't understand enough. We get enough variables in there and everything, and then maybe we'll find out that actually we can predict what's going to happen, then maybe at a quantum level or something like that. And when they really came down to it, it turns out that it really is just like random. And like that in quantum physics, there are some things that are just like truly random in the universe. It seems to me that randomness is a part of the universe. It's not deterministic. But that's not proof. That's just my opinion, right? Okay. So, but Jerome Powell is not random. What he's going to do is already decided. So I can come in and I can say there's a probability that X thing happens. Really what we're talking about is we're talking about how much information is there out there that I don't know about that could potentially change his decision and make his decision one that I wouldn't expect, right? That's really what we're talking about with probability, right? Well, I say that the amount of information that we don't have that could potentially change that and make Powell come out and raise rates today, infinitesimally small. There's almost no chance this can happen, right? But if he came out and he did it, then anybody that's out here with put options in the treasuries is going to make a bundle of money, because that's going to be a data point in X that is going to be way outside of what the market is expecting. And the options can move, and the further it moves, the more money you make on the option because of the convexity of it, right? And so you want to take advantage of that convexity. But if you don't have that in your favor, then what are your options at that point, right? It seems to me that there should be some sort of an optimal stop and target that you could use in your strategy, but that ultimately the edge is going to have to be in you. How much information do you know so that you are right more than random? Yeah. The way that we have to trade in futures as small traders essentially necessitates that we correctly predict what the data series is going to do to make money in the long run. Because otherwise all you can do is just have a stop that's wider than the expected volatility, and then when the fat tails come, you can get screwed. Which book by Taleb do you recommend? Oh man. Well, so I don't know. I haven't read them all. I suppose it would help to understand why he's reading them. So Taleb believes that there's a problem in academia. He's saying that there's a lot of, especially in the social sciences, that they're all basing all of these conclusions and research off of a faulty understanding of statistics, and frankly a faulty understanding of science. So this is where the idea of the black swan comes in. Everybody thinks it's like, oh yeah, there's black swans. There are events that like nobody predicts, right? But what Taleb is really saying is, it's an error in logic that people say, and you see this during the coronavirus panic all the time. Okay, for instance, people say they're worried about the vaccine. Okay, well, experts will tell you there is no evidence that there is any problem with the vaccine. Okay, well, the lack of evidence doesn't mean the same thing as evidence proving that there's no problem, right? This is the black swan problem. How many white swans do you have to see to disprove the existence of black swans? And the answer is that it doesn't matter how many white swans you see. The only way that you can prove that black swans exist or not is either by seeing a black swan or finding a piece of information that would prove that they literally can't exist. Like that there's something in the genetics of swans that prevents them from having a black pigment, and therefore black swans are impossible, right? That's what that's all about, right? So his books that he's been writing are essentially going through these ideas. And the ideas, the main ideas that he has, there's three main ideas that he has. Number one is that there are black swans, and that because of the way that our world works, the black swan ends up being completely dominating the data series. Okay, like you come in, an example that he uses a lot is Ebola. He's like, everybody says there's no reason to be concerned about Ebola. But the reality is that if there was an Ebola breakout in the United States, that the number of people that would die from it would be so astronomically large that it would overshadow almost every other cause of death in the last century. And so, should you be concerned about Ebola? Yes. And that is why, when Ebola, there's a breakout and everything, the Centers for Disease Control, and all that, there's a lot of money put behind that to prevent a true disaster with Ebola happening, because it would just be absolutely devastating. Okay. So that's the first thing. And then the next thing is anti-fragility, which means that you need to have strategies that don't just completely fall apart when an unexpected data point occurs. That basically your system should be set up to either one, expect that something crazy can happen, or B, make money when something crazy happens. And that's how he made his fortune, was that he was buying options on things that were unlikely, and then they would happen. He had developed a way of actually predicting when those particular black swan events were coming, and trading them with options, and that's where he made his millions. And he makes enough money now that he basically just spends his whole day engaged in academic research, right? What do you think about those escaped monkeys and that woman getting sick? I don't think much of it at all. It's kind of a funny story, but I don't think it's a big deal. Okay. The third point that he hits home a lot is called skin in the game. And this is a little bit more of a philosophical thing, but he's saying that when the pursuit of the thing is entirely down to an institutional structure of something. I don't know how he puts it. I don't understand this idea as well, so I don't know how to use his words. Basically he's saying, if you have an institution like academia, and the whole goal in academia is to become important in academia, then the pursuit of becoming important in academia dominates the actual research. And so he's saying that actual research at our universities has become extremely tilted and flawed, because the actual act of becoming a prominent researcher and what you have to do to get published and everything like that ends up being more important than the actual research itself. And therefore, the kind of research that he's done, where on statistics and proving that all of these things that people in academia are saying are actually not true, gets ignored largely by academia because it doesn't fit in with the structure of their system. And I think that is very true. Did you know all this stuff I've been teaching you about market microstructure? Um, like Jean-Philippe Beauchamp, he is the editor of the archive.org quantitative finance section, right? Then now that is run by a university and everything. But did you know that he actually has a hard time, or he was complaining on LinkedIn yesterday, 2 days ago, that it's hard for him to get published in a top 5 economic journal? Can you believe that? Here we are. I'm telling you guys, this is some of the most significant research of the century to come out, and has broad implications for every level of society. And academia is doesn't care, because they don't have the prestige yet. I think this guy Beauchamp, if he continues to have as many significant papers and discoveries as he's been putting out, that guy's gonna win a Nobel Prize. But and then we'll say, yeah, we knew about him long before he became popular. Okay, so he has 3 books. Taleb has 3 books on those 3 things. He calls them inciertos because he intends them to be the basis for scholarly understanding that people would use in the future, in the same way that we use the logic of Greek philosophers as kind of the start for some of our academic institutions, right? And then he has a fourth one called a technical encierto, which is what I'm reading right now, where he is much more into the math. So I guess it's what perks your interest, but probably if you really want to try and take advantage of the edge that might be available through Taleb, you're probably going to want to read all of it, right? And maybe you would read it in order and read the technical encierto last. Supposedly, there's going to be, I think that there's going to be 3 technical enciertos. I don't know how you say that word, by the way. I'm probably saying it wrong. I think that there's going to be 3 of those, and he's only written the first one. So there's like more to come. This guy. When you look at some of these guys and the amount of content that comes out of them and how much they know about these things, it's really quite staggering. Well, while we've been yapping, not much has happened. Not much has happened. No, the treasuries they moved around, but only like a tick or two. Oh yeah, he will wait. So this whole thing got triggered by trying to say what is the probability that Powell will raise rates. Well, it's not a random variable. Powell is not a random variable. Maybe how much Seth knows about what's going to happen, maybe that's a random variable. But Mr. Powell himself is not a random variable. Well, we talk about it like that he's a random variable. It doesn't work that way. Yeah. So how do we get convexity in futures? Right? Because it kind of suggests maybe you need to do options on futures. I don't know. Maybe we just need to play with options more. The market reaction to the news dropping is random? No. It's actually quite deterministic. That's the crazy thing about it. Like you can come in if you put a certain series of orders in a certain order, the result that you will get out, the price will always be the same. The exchange matching mechanism is deterministic. You get put A in, you get B out. We test this. We spent a large portion of my time at Goldman Sachs was testing these sorts of things and proving that our systems were deterministic. So convexivity, as my understanding of it, which is very, very basic at this point, according to Taleb, the convexivity has to do with how your strategy performs as the underlying function or the price of the underlying thing that you're trading changes, right? And you want to have something that as the price changes, the amount that you make as it moves increases, right? So when we're talking about futures, if here we have a graph, can you see that graph? Probably not. Here, let's like clear a space so that you can really see it. Okay. So if this is a graph, right? X is price and price and Y is profit. Okay. If we go long the S&P 500 at 44.20, so here's 44.20, right? Then what does a graph of our profit look like? Well, if it goes down, then we lose money. And if it goes up, we make money. And if it stays at 44.20, then it's the same, right? And each dollar that it goes up, this is going to go up 12.50 if it's an ES contract, right? Right? That is the graph of our profit. Okay? And what convexivity means is that instead, if it goes up, the more it goes up, the more that we start to make profit. And so it turns into like this curve, like this. And preferably your profit is capped. Okay? That's what you want to see. And that's what he means by convexity. Is it's the relationship between the underlying function and or the underlying variable and your function, or rather your stock or your strategy and the underlying stock that you're trading or whatever. Can I try that again? Man, it's the relationship between the variable and the function, or rather the underlying thing that you're trading and your strategy, how much money you make when that thing moves. Yeah, I mean losses capped, because if you buy like out of the money puts, for instance. So let's try this again. Let me show you. You see these when you're learning options. If you're learning options and they're not drawing these kinds of graphs for you, then go find a different education, because the best education for options will do this sort of a thing. So what will happen is, for options, like if I'm buying a call, maybe this is the current price, and I buy an out of the money call, right? Then in order for me to make money, it's going to have to go further than where it was. The strike that I bought plus how much I paid for it. Okay. Now, the difference between this is going to be smaller the more out of the money that it is. Okay. If it expires worthless, then it's just going to be this. Right. Let me do that again. If it expires below your strike price, then you lose the cost of the option. All right. But if it comes up, it goes like this. Okay. That's how much money you make. Now we view it like that. But the reality is that there's actually a curve to it. There's actually a curve to it. Because of what? Because of gamma. As the price of the stock increases, the gamma of the stock increases too. The gamma is how much the value of the option increases as the price increases. Right. Thus, buying a call option has positive convexity for you. That's what I think he means. Or another way to put it is, everybody says that being short theta, which is to sell options and make money off of the time decay, that's like the best, most profitable way of trading. But what you will see time and time again is all of these institutions that run these kinds of strategies, they have flawed statistical modeling in their models that does not account for fat tails. And so most based on all of the past data, you're going to make money off of just being short theta. But as soon as that event comes along that you did not anticipate, then your whole model falls apart, because of the convexity of what you're doing has a negative convexity, right? And so when a tail event comes in and you realize that the statistical distribution of the thing that you're looking at is different than what you thought it was, your fund blows up. And Taleb, he goes through history and he points out many times where these firms, like these options market making firms with like all of these award-winning economists and everything else, completely blows up. And then when it happens, they say, oh, well, It was like a 4 sigma event. Like it should never happen. And so you can't blame any of us for not being able to see it. And Taleb is saying, no, you don't understand. You think, and this is what I keep trying to tell you guys in futures. You think that you come out and the one 30-minute range of the S&P 500 is this distribution that looks like this, right? And you think that it looks like that because that's what the past data tells you. But once you start getting more data, you're going to go and find that there is a piece of data that's all the way out here. And as soon as you see that piece of data that's all the way out there, you actually realize this is not a Gaussian distribution. This is like a mean error distribution that is actually more like this, where not only does it have super fat tails, which means, and by fat tails I mean like the width of this, that this distribution goes really far out here, and that these data points over here basically cancel out all of the area over here, but that there's actually the height, that how tall the tail is actually fatter too. It's actually bigger too. So there's more data points out here on this side than people expect, right? And you see retail traders, haven't you seen retail traders fall victim to this? So like I give you a good example is the max price action trading system. So max price action trading system, a popular futures trading system that I've seen, and it's basically a set of heuristics about what's happening in price that I don't think you could really automate, and I don't think that there's any actual real edge behind it. But the main thing, the thing that strategy hinges on is that your stop is larger than your target. And so they come in and they say, you want to take 8 ticks. You want to try and make 8 ticks and risk 16 ticks to make it, right? And when Mac wrote that book, or he wrote that strategy, 8 ticks on the S&P 500 was a a little bit smaller than the range, so it was no big deal. And like for it to go 16 ticks against you, it was like you probably had to have done something wrong, because if everything's just random, generally speaking, you're gonna get filled. Well, then what happened? 2 things happened. Number one, the S&P 500 doubled, and so the amount, the width of the range has doubled as well to account for that. And then second of all, you get these volatility spikes, right? So now all of a sudden you go from a market where maybe in an hour you could make 16 ticks to in an hour it will go like 200 ticks. Right? We're like trading ranges of like 50 points here in the S&P 500 this week, right? And so anybody that was sitting out there with an 16 tick stop, they're getting stopped out way more than they ever anticipated, and the system blows up, and the person thinks, well, it's been working, so I'm going to continue using it, and they trade it to ruin, right? The more edge you have, the less. I don't think so. The thing is edge can come from so many different places, right? So Taleb is basically saying that your edge can be in when a fat tail event happens, you make so much money that it makes up for all of the times that it doesn't happen. And if you can make it so that you're better at identifying when it is going to happen, so that you reduce the number of trades you take overall, that's when you can really make some serious money. And I totally agree with them. So like this thing in oil, for instance, we had a move in oil that was way more than the options market makers were expecting. And I can't imagine what they were thinking. What's the models that they're looking at that was saying that those were good prices? because it was such, I knew, I took it. I was like, this isn't right. I took it and it worked out. And there was like almost never any doubt in my mind that that trade was going to work out. So how do you know when these events will happen? I don't know. I don't know what his answer is. I think though that you can follow the news, and there can be situations where you can, I like the thing, so one of the things that he talks about that's interesting and I think is true. He doesn't provide any proof for it, but it really, I definitely see when he says it. It's like, oh yeah, I definitely see that. People, humans are naturally attuned to the existence of black swans. So when I come here on stream, well, you guys maybe not as much, but we certainly still get a lot of it on stream. But especially when you go on the internet and you read stuff about what's going on in markets, what are the comments that you see? You'll almost always see the people in the comments talking about some sort of crazy risk event that is on the horizon that is extremely unexpected, right? There's no way that that's going to happen, but they're always focused on these black swans that they think are going to see, they're going to happen, right? When you get on news media, you get these guys like Michael Burry. You know what? Michael Burry has made some money too, but he makes a lot of bad calls, I have to say. He has been basically like bearish forever and always saying that this is going to fall apart and it's not going to work very well, right? And Nouriel Rubini, he's another one that's always out there a doomer, right? And the people on that consume the news, they eat this stuff up. Like part of the reason that these guys get the attention that they do is because coming out and saying that something awful is going to happen, uh, the people eat this up. And why is that? Well, because we as humans had to evolve to be sensitive to the fat tails. Otherwise, we wouldn't have survived, right? Because when it comes to survival, a black swan essentially means is the difference between the survival of your species or not. You get what I mean? So humans are actually quite adept at being aware of and looking out for these black swans. So I think that if you just keep informed and you know what's going on in the market, that you'll start to see these situations where these black swans might appear. Now I'm a little bit different because I know what's likely to happen and what's not. Not all of these people, for as long as I've been around, I've been seeing all these people saying that it's all going to fall apart, and then it never does. Even in the coronavirus crisis, like the one of the things that's just really crazy to me in my mind is that now all investors look at the coronavirus, the market during the coronavirus is like the end all be all of market volatility, you know, money destroying events. And the reality is that it was pretty tame, relatively speaking. I think that there was some of these downturns that we saw, but like the euro crisis. I think the euro crisis was worse than COVID for the markets. But because of the way that we juiced the economy up after that, then it's, I don't know. If all of this juice doesn't work and the economy ends up falling apart because of it, then it's going to be really bad. But it's probably unlikely. Yeah, then they tell you they were the ones that forecast 2008, etc. Well, yeah, I mean, the objective here is to be one of the people that trade that and make money off of it. And the whole thing is that if you do that successfully, um, you make a ton of money, and that's what Taleb did. Like the thing is that it does work. If you're smart, it seems that it does work. That You might only be right once in 10 years, but then the one time that you're right, you make $30 million off of it and you're done. And then you retire and just go have fun like the Lev does. Math deals with measurements, not reaching for edge. Okay. Why you don't lose too much on your 401k? Yeah, just contribute it into your 401k and don't mess with that too much. I think that it's, if you really want to get into it, it's fun to try and do things like, oh, I want a certain amount of it. I don't actually want to be 100% S&P 500. I want a certain portion of it to be into foreign equities, and I want a certain portion of it to be in this, based on the macro environment that you expect to see over the next 5 years or whatever the deal is. But yeah. I don't know. But the bigger thing here is that, again, when it comes to futures trading, because you don't have, if you're just trading the outrights, you don't have all of these functions that you can use to change the convexity of your strategy and stuff. You don't have that option. So how do you make money? Market making, right? Which means, probably means, algorithmic trading and being fast. Or you have to know what's going to happen. You have to know what's going to happen. Oil. I'm still pretty bullish oil, I must say. Although maybe they're getting ahead of themselves today. I don't know. We'll see. Looks like gold is getting hammered a little bit. They're back below 1850 now. They were doing good at the start of the day. Well, it's still below. It's still above kind of like the support area, which is going to be like 1818. But that does not look so hot in gold right now. Maybe somebody's making a bet on interest rates rising. Possible. Although right now, the interest rate market is kind of cooling off. Hasn't moved much at all, but the general trajectory has been higher. I keep getting gunk coming down my throat. I don't know what the deal is. It's like when I'm asleep, it all sits in my head, and then in the shower it should loosen up and come out, but it doesn't. But then once I start talking, then it does, and it's annoying. It's annoying AF. Okay, so you know what? I am being a little slothful here. So let's just come back here and double check a couple of things, make sure we know what's going on. Okay, oh, I should point out that there are new home sales at 8 o'clock. That's something that we want to keep an eye on. Make sure that's running. Let's just take a check of Twitter here. Okay. Stephen Deal says there's some large non-public information seemingly priced into the crypto crash. So that seems like he thinks that there is some non-public information. That's super speculative. Just because it's moving doesn't mean that there's non-public information. Okay. Once the embargo drops, it's going to be very interesting to watch the bottom fall out. And Bitfinex says usually when the news is really bad and involves the tether fraud, prices suddenly skyrocket for no known reason, and then the bomb drops. Yes. So I think it's unlikely that what we're seeing right now in the cryptocurrency market is because of some big bad thing that's going to happen. But there are some risks that are waiting for Bitcoin in the future, and that, like certain regulations and investigations and stuff that eventually we will see. Smaller stop loss with more contracts versus bigger stop loss with less contracts. But how do you don't have any control over that though, right? So the issue becomes like, okay, so I can come in and I can say sometimes I have more conviction, so I'm going to take more contracts, and that should give my distribution like a bigger tail over on this side, right? But guess what? You can't control it. It can go against you too, and so you get a fat tail on this side, and they balance each other out, right? Big day today, aka FUD. No, I don't know if it's actually a big. Everybody thinks it's a big day, but I'm of the opinion that it's actually not going to be all that interesting. No, that's not it. Where did my oh, there they are. I don't think that today's meeting is actually going to be a big surprise. Powell could say something crazy. Powell, you know what? Powell could say something about the, reducing the balance sheet, for instance, that might panic people. But I don't know. This market's going to be all over the place when he's talking, probably. And then the other crazy thing is that because of all of the activity and everything else that's been built around it, you're going to see a lot of unusual and probably very unintuitive moves on Thursday and Friday too. You mean by means of getting stopped out more? Well, it's not just getting stopped out more, but when you get stopped out, it's going to be bigger, right? So I don't want to bring it back down again. I'm going to draw on top of the dom here. If you go in and you say you have a strategy where your winners are where you have a larger stop, then what are you doing? You're increasing this tail and you're shortening this tail. What's going to happen? You're going to lose money, right? Let me do that again. Here is 0. You do something where you shorten this tail, you put most everything over here, but then you make these tails really long, right? What happens is this, because most of the data points are over here, it will appear that it works at first. But then when these data points show up, which are by definition less common, it completely changes the profitability of the system. This is why so many retail traders, it seems like it's working for a while and then they blow their account. That's why this happens. The way Taleb puts it is, um, how do you put it? A good man. It's really hard for a good man to be a crook, but a crook is really good at pretending to be a good man. Or, as he puts it, a fat-tailed distributions are really good at looking like Gaussian distributions. Okay. At first, it will look Gaussian because these events over here are less rare. And so most of the time when you're going in and you're doing your analysis, it's going to look like it's Gaussian and that this is all going to work. And it's not until you have like a really massive data set or whatever, and you get those future data points that are all the way over here that you get, oh, yeah, it doesn't work. Would Trump getting reelected and Dweck going to 50 billion market cap be a black? We haven't checked that Dweck since this week. How have they been doing? Did they come back after that impressive rally, or were they able to hold those gains? Ooh, Digital World Acquisition Corp. Well, it didn't come back completely, but it did come back quite a bit. This is due to many things: lack of understanding of how the market moves, a lack of trading plan, and far too many trade for. Yeah. I'm just telling you, man, this is the biggest problem that I deal with. This is the one. Oh, Dave, hey, thank you so much. I appreciate it. You don't have to do that. But I love it when you do. This is the thing that I gets people, it gets the new people so often, is they go and they look for the strategy that has this setup where they make a small win most of the time, and when they lose, it's really bad. Because it's totally an ego thing, is you get to feel like you're right and that you're the greatest most of the time, and then when it doesn't work out, you just pretend that it didn't happen. You just forget about it. And right, we see that. We see like other channels and stuff do this sort of thing. I do it myself to some extent. When I'm doing these trades where like I'm taking multiple contracts and trading the range and then trying to let it run, yeah, it tends to work out, and I can get some really big winners on it too. But when you lose, they're really bad. Those losers can just single-handedly destroy your account. But everybody always goes right for them anyways, even as much as we warn them about it. I don't know how to convince them that that's the case. I guess other than use Taleb, other than to slide Taleb, because everybody knows him. But the bigger perspective, why do most retail traders lose? I think it makes perfect sense, because you can't build any convexivity into your strategy, right? So if your strategy is just I'm going to pick a point where I'm going to enter, and then I'm going to give it an X tick stop and an X tick target, and just let it go until that trade finishes, right? And I'm just going to hold it until that thing finishes, right? If that's your strategy, your results are probably just going to be random. Because even if you have a really good entry signal, there's just so much noise in the market. That it's unlikely for that to really work out. Like the percentage win rate that you're going to be able to get from doing that, you're going to have a hard time getting even above 55% win rate on that sort of a thing. Okay? Like seriously. Yeah, there's a lot of noise. That's why I kind of stopped doing it. Cuz I've learned, oh, okay, what I need to do is I need to get in, but if it goes, I really need to let it go. And I need to have something that tells me to get out, but I need that something that tells me to get out be something that when there's a really strong move, I'm able to get a lot out of it. Essentially. That might mean lower win rate, but what I've been able to do is it seems that I've been able to keep my win rate about the same and still catch more of those big winners. Yeah. Matt, he's I mean, I like Matt, but that is totally what he's doing. And I honestly, I think that it's a little bit intentional too. I think that he knows that there's a problem with it, but in the short term, it's entertaining for the audience and he looks good while he's doing it. And everybody just kind of forgets about the times that he loses all of his profits, right? But this is the statistical properties of why it fails, right? Future speculating works well when markets are generally rising, but in this environment, oh my OMG. Well, I mean, if you were really I haven't traded it so much, but You could have made a decent amount of money from the treasuries lately. I don't know. Is a lot of it is being in the right instrument, right? That's the one place that you can kind of create a little bit of edge for yourself is be in the things that are moving. If you're going to be a noise trader, it makes a lot more sense to try and do something like what Futures Trader 71 does, where you take some multiple contracts, and that way you can have some contracts that you really let run, and that can give you that long right tail. But even what they're doing, I think, is flawed because again, there's still this left tail that you're going to get that you're not going to notice until it's too late, and it feels to me. I don't know. I would love to sit and talk to him about it because it kind of seems to me that they kind of ignore that left tail. Like they don't acknowledge that it's actually there. They think that when their students stop out, that it's because of them being dumb and not because there's a left tail. That you're setting yourself up for it, right? Like again, we always blame ourselves instead of the strategy, which is supposedly an asset, right? We always say you want to take responsibility for what happens. That's how that's what successful people do, et cetera, et cetera. But here in futures, I think it kind of works against you because you blame yourself. And so you continue doing the thing when in reality, the thing is tilted against you. The thing is tilted against you. And when, as once you realize that it's the strategy, maybe then you can go and change things and go and find something that works. And hey, we should acknowledge her. Like my thing is futures trading and being informed and trying to know what's going to happen. But that's probably not the place where the most edge is available, right? In my opinion, probably the place where the most edge is available is in trading the options. What do you think about trading like Kevin Torch or Last? I'm not sure I'm familiar with them. We're not talking about Meet Kevin. Have you guys seen the drama with Meet Kevin? Oh my gosh. I hadn't heard anything about it until yesterday. So I went on their subreddit and started reading what people were posting and everything. The reason I found out about it yesterday was Graham Stephan made a video about it. So basically, Meet Kevin, really, really successful YouTuber. I don't know how much he's made from YouTube versus his trading activities and so forth, but basically he has like a $30 million portfolio. Okay. And he has always been like, buy the dip and just stay long sort of a thing. Right. And then as soon as we had a market crash, he said, "Oh, I sold my whole portfolio." So while he's having like these kumbaya sessions, like to buy the dip and hold and everything, he was selling. What the heck? So Graham Stephan makes a video about this, and I think that Graham was too nice to him. To be honest, I can't say anything bad about Graham, but like Graham knows Meet Kevin, like they've done stuff together, they've met and had made videos and stuff together. So I think he might be, being a little bit too nice to him because they're friends. This guy, well, is he a pump and dumper? I don't know about that, but he was literally telling everybody to buy the dip while he was offloading. So he completely went against everything that he said. And while he was doing it, he was telling people something the opposite of what he was doing. And the people in his subreddit, some of his audience was so pissed. Well, like this is the unfortunate thing about it, is that this whole event probably makes him more popular. That once you get to that level, any kind of drama tends to give you more views. Drama tends to get you more views. So now you all listen to this and you're like, oh, there's drama with Meet Kevin. I'm going to go over to Meet Kevin's YouTube. Well, you're probably one of you is right there right now, and you've got Meet Kevin's page open, and you're like, oh, oops. You're rewarding their bad behavior with your traffic. What are you going to do? I know. I do it too. I've visited his webpage. We're just like naturally attracted to the drama. And these guys, they take advantage of it. Meet Kevin is his name. Big YouTube channel. Let's see what you say you're done for. 137. Yeah, okay. So are you trying to do smaller, more realistic trades now, Celine? Because before you were giving me like $2,000 trades, and now you're just showing me like 137. So that has middle class values, I guess. This is the thing that pisses me off, man. Like, I take this very seriously. To me, even though it's just like, how many people do we have right now? 27. That's actually pretty good. Thank you guys very much for watching. Okay. I know it's only 27 people, but to me, like when I'm speaking and you're listening to me, to some extent, you're almost like you're giving me permission to think for you for a moment. Of course, it's not like you believe everything that you're thinking, but I'm in your head. You're all following my train of thought. Like that is some real serious, crazy power, even over just 27 people, right? I take that very, very seriously, right? In particular, anytime that we talk about the possibility of making money, there needs to be an equally weighted statement about the potential for loss, about the risk involved, right? That's like my obligation, you know? I take it, and we got to be really careful about what we say. I don't want to say something that I can't back up with empirical evidence, and if I do, I better be really clear to everybody that this is just my opinion, and I'm not sure that I can prove it. Right now, maybe sometimes that's not what people want to hear. People just want the certainty, right? They want somebody to say, "I'm going to make you rich. You just do what I tell you, and then you'll be rich too because I'm rich." That's what most of these people do. But what happens is they don't take the influence that they've gained they don't treat it with the appropriate respect. Instead, they completely abuse their audience. They say, "Oh yeah, you need to buy the dip." Meanwhile, you're selling. What the heck? Seriously? It's just absolutely crazy. And so that now you got all of these influencers, and we see this more and more, where they're literally just cheating their audience. Like they're just taking advantage of their audience for their short-term profit, and they don't give a shit about them. It pisses me off to no end. It's like some crazy responsibility that people are giving you, trust that people are giving you, and you're just abusing it. Right? Well, people like being abused, so that's what gets views, yeah. And one of the ones that drives me crazy the most is when these people make a ton of money on YouTube to the point where they can just do that, or even frankly to the point where you could just retire. Like seriously, me, Kevin, could just retire and just live off of the $30 million. But what is he doing? He's selling while he's telling his audience to buy the dip. What is possible? You're rich. You don't need the money. Why are you doing that? Or you're selling education courses. I don't know. I guess listen, if you're rich, I'm not going to say that there's no reason for you to sell education. Like that's cool. You have the time and you want to teach people a certain thing, and especially for me, I'm not going to tell you everything that I have because some of that's my edge, and if it was publicly known, that would ruin the edge. Okay, but there's other things that I would like everybody to know. There are other things that I would like to teach people because especially like market impact, this sort of stuff, because it has implications for society, and it's things that more people knowing, society will benefit. Okay, and creating a course for something like that, that's okay. That's okay. But then you go and you make it overpriced. That's where it really pisses me off. There's some of these people that they literally have hundreds of thousands of YouTube subscribers. Okay, so these are people that are making like $10,000-$15,000 a month just on YouTube advertising, and then on top of that, they have to sell a $2,000 course that mostly contains information that you can find on the internet already. That pisses me off to no end. I want to write a book. I do. I wish I had more time, man. I am now. It's once you. It seems like once you hit 35 is when it starts to hit you that you don't have enough time to do all of the things that you want to do, nor the energy, right? Because I could write in the evening, but man, I work hard here in the morning, and then I do my day job, and then I exercise, and by that point, I don't necessarily want to study or write. It's hard. It's hard to do that. Yesterday would have been a good time to do something, but I give that time to my wife so that she can go shopping and stuff on my off day, the day that I don't exercise. But I did still read before I went to bed. I still read a little bit of Taleb's book. He actually said he wants to be worth 1 billion. Fine. I mean, that's a pretty crazy goal, but abusing your YouTube audience isn't going to get you there, man. If you want to be a billionaire, you're probably going to need to start a fund. And that's another thing, is why don't you start a fund? Well, maybe he realizes that some of his trading was a little lucky. One of the things that I saw a lot of people complaining about in the thread, and I don't know how true this is because I don't watch him. I've been to his channel before, and I was like, why does anybody watch this? This is all looks like stupid. They were saying that like, oh, he was teaching technical analysis stuff, but it was very clear that he didn't know any of that stuff. He did real estate, and everything that he was saying about stocks was new. And the thing is that the reasons that Meet Kevin is citing for selling his portfolio is based on this very speculative string of events. Like, that's the crazy thing about it to me, is that it was like, well, this is going to happen and this is going to happen, and it's going to lead to the price of food skyrocketing, and that's going to create a recession and all of these things. I'm like, what? How do you make that big of a... I guess if you're just taking your money out, if you're wrong, then you just miss the next line, rise. The mental game of trading. I saw somebody on Reddit talking. That was the other thing, is that they were complaining that his course was mostly about psychology, and when somebody in the comments said, psychology is for people without edge. It's true. Let me tell you what. When you don't have edge, psychology is really, really important. And if you do have edge, I mean, it still helps, because you're going to get into these situations where, it's really hard to keep your nerve, and it's hard to continue to make effective decisions. But I'm telling you what, it's a lot easier to have that psychology thing under control if you know that you have edge. The treasuries have sold off here pretty hard. I didn't get really too big of a move in the micros from it, so I don't know about that one. the ES here is being a little, and let's see here. Let me switch this. They're flipping a little bit since the open. I guess this move that they had, they sold these down from the equities traders. That might just be, well, that might be a bet on the FOMC. Gold is still getting killed here today, so. Well, he admitted that he doesn't know anything about TA. Fair. Obviously, I mean, you know what I'm going to say, right? Well, if you knew anything about TA, then you'd know that it doesn't work. Do you see how the cell stats as being very fat and then it chops while going down? Speed has predictability. But I think what you're trying to say is that there's more volatility when we're declining, right? There's more overall price movement when we're declining. I just get annoyed when people bring up psychology and trading like they are psychologists, the same people that talk about TA. Yeah, well, like with the funny thing about like the best psychology book for trading in the zone, right? Basically came about because this guy couldn't find a technical edge in technical analysis. It's like, okay. After that, is he now a millionaire trader that is consistently profitable? I don't know. I haven't seen any evidence to that case. Something that really irks me is that when people bring up, oh, this person's making money or this person's making money, and when I go and I look at it, and it's like, yeah, you're not going to make money doing that. It's like a really good example. Mark Minervini, right? He's won that trading contest like 2 years in a row now. But guess what? Like, there's a lot of penny stocks and stuff in it. And he has a decent amount of money to trade with to begin with. So are you going to be able to duplicate his results? Probably not. What's your guess on the market today? Does it finish green or red? I think that what is going to happen is the press conference is going to come along. Maybe Powell says something that's funny or controversial and causes a little bit of volatility. But then in the end, and it might not be today, but in the end, that we will end the week green in the S&P 500. And the treasuries, they might sell a little bit, but they'll largely be where they are. I think that this volatility that we've been seeing is mostly uninformed trading, funds doing their thing and everything, and that this volatility that retail traders are largely panicking over nothing. So if that's the true, then everybody's going to get, really anxious about the FOMC meeting, and then when nothing happens, they're going to be relieved and will rally. That's what I think will happen. If I had to guess, of course, I don't know what's actually going to happen, but that's my prediction. Now watch them go and raise rates. After I've said how extremely unlikely that it is to happen, he's going to come out 2 p.m. Eastern time. We'll be here streaming and they'll raise rates. That's a good guess. Yeah. Well, S&P 500, good little initial run there, and that corresponds with the selling in the treasuries, and the oil is also bouncing there with them. I'm not seeing anything too crazy in the dollar index, but it is moving around a good 10 cents. You're in cash. Well, it's I'm kind of waiting for this week to kind of roll over before I decide to maybe put some money at work. I don't know. So there's the FOMC meeting is one thing, right? There's something else going on, and that's that there has been a couple of data points lately that haven't been very good. So some of this February data might be bad and might cause some concerns. So we'll see. Because the real concern here, I don't think it's just that the Federal Reserve is going to raise rates. Like if it was just the Federal Reserve raising rates and everything was going really well, I don't think that people would necessarily panic. But it's also that we're getting a couple of data points that look like we might get a slowdown. Okay, the Treasuries took another 2 ticks there. Am I reading that right? No, that price scale is a little bit off. Hmm. And it looks, I can't tell, it looks like maybe a little bit of flattening on that move, but not a ton. Hey, Big Toasty, how are you? You're right. Bank of Canada rate decision at the top of the hour. Thank you for pointing that out. And also the housing numbers, right? My sim account is killing it, but I don't think I could trade like this with real money. Yeah. Well, but like that's again, why is that? Well, it's because you know that there are tails on it that you're not seeing yet, right? And you're worried enough about those tails existing that you don't want to trade it with your own account. It's the same with some of these other streamers that they only trade combine accounts, right? It's because you know that there are fat tails out there that can completely destroy you, and if you blow out and it's a combine account, then no big deal. But if you blow out and it's your money and it's everything that you had saved up, then that's a problem, right? Today will be funny mini news, yeah. Well, so here's the other thing. The Tesla earnings might end up being a bigger deal than the FOMC meeting. Did you see the whole Microsoft thing yesterday? Let's go check on them. How is Microsoft doing today? MSFT. Oh, okay. Okay. So yesterday, they sold on the earnings, but it looks like they easily bought that back up in the overnight action. Yeah. Because Microsoft earnings were good across the board. Good across the board. Yeah. There might have been somebody just trying to be sneaky, you know, discourage everybody. Push it down in the overnight market, try and get people to panic. I want to trade just one micro from now on, and that sounds more realistic. Oh, I got you. Okay. Um, did I reset my DOMs here? I'm gonna do it here at this spot. Because clearly we've gotten a pretty strong down move that I wasn't anticipating and that I haven't participated in. So I'm starting to feel a little FOMO now. But again, we got this stuff at the top of the hour, so why even bother? Jeez. That Biden Trump rematch in 2024, everyone is anticipating a dead heat with Biden at 45% and Trump at 44%, according to a political morning consult poll. Well, that it is a dead heat with as unpopular as Joe Biden is really quite amazing. I was supporting Trump and everything, but it from just a practical political standpoint, we stand a better chance at nominating almost anybody else. That's the unfortunate situation. But if he runs, it's going to be a mess. I'm probably not going to enjoy it because it'll be like all out war in the Republican Party. 2 ticks up. Please leave DeSantis alone. We need him here. Oh man. I mean, he's the one. I have to say though, like I was always what almost always happens is there's a politician that the Republican base is really enthused about going into the primary, and then as soon as the primary starts, they realize that he's not as good as they thought. That happens almost every time. It's like as soon as they get on the campaign trail, they don't seem as good. Now, DeSantis has been a little bit more in the limelight, so presumably that should be less likely to happen to him. But I just can't shake that out of the back of my head that like DeSantis might not be as attractive as he seems, especially if Donald Trump runs again. Like, think about that. Donald Trump runs again. Ron DeSantis runs again. They do a debate. Donald Trump does the same things that he did to the Republican field in the debates last time around, and he makes DeSantis look like a fool, right? Like, that could totally happen. DeSantis already said he isn't. No, I don't think he necessarily has, though. In fact, there were people where this whole kind of, I think it was kind of drummed up by the media and wasn't really actually a thing, but the whole thing was that Team Trump was complaining that DeSantis was not saying that yet. But that you sure are getting the impression now at this point that it is a given that Donald Trump is going to run and that they're already trying to clear the field for him, which is like, what? We couldn't survive a lockdown happy Democrat. Well, I don't know if you'd ever get anybody more lockdown happy than Biden. If it was politically feasible, Biden would have done it, I think. Okay, here we go. Well, I'm not seeing the there's a little bit of pulling of liquidity here in the 10-year, but not too much. Okay. Well, they bought up on that. Actually coming all the way back up. Oh, you're saying that Florida couldn't handle a lockdown. Yeah, I get you. Who would you replace him with is a good question. I guess the other thing is that the other big contender is the senator from Texas. It's you know what? I must not be as on today as I thought because I can't even remember Ted Cruz's name. Oh, that's his name, Ted Cruz. There you go. Yes. Ted Cruz is probably going to be a big contender there. You know what we should do is we should you remember that crazy lady from the Democrat primaries that was like super religious, right? Maybe we can get her to run as a Republican just for the entertainment value. Huh? Come on, it'd be good. I like Ted, but not as president. Yeah, but you might just be your best choice, though. Like, that's the thing. I don't take any joy in saying that, but like that's just the fields, right? Rand Paul, Ted Cruz, Ron DeSantis, and Donald Trump. Okay, well, we had a little bit of a move up, and then after the S&P 500 opened, we had a bear move to the downside in the treasuries. And then after the Bank of Canada decision and new home sales, which by the way was pretty good. What did we get here on new home sales? 811K versus 759K. New home sales was good. But we moved back up here after the Bank of Canada rate decision. Beat Buttigieg. Ted was a lukewarm neoconservative before Trump made. I'm not so sure that's okay. So this one is a tough one to dissect. It's not like I don't know why you're saying that, YouTube Finance. It's the thing is, oh man, it's just so hard to be a conservative because if you're a strong conservative, but you're not a lunatic, there's a portion of the conservative base that says that you're not a conservative. It's really like, where is that line, right? Like, and when it was Mitt Romney, and Mitt Romney was running around saying, I am severely conservative. Well, no, you have a couple of, he does have principles, okay, but he also did a lot of saying stuff about certain policies that he just really didn't believe. He hasn't acted on those at all as a senator, and the only reason he was saying that stuff was because of his advisors. And the label of a Republican in name only, I think, is a very appropriate for Mitt Romney, because he's not a Democrat, but he's not really actually a Republican. And he's definitely not a conservative. Ted Cruz is very much a conservative on almost every issue. And it's not just that he's very much a conservative. He has more than almost any other politician tried to appeal to the conservative base. But the problem is that the conservative base moves. Okay. Well, here you go. Ted Cruz is not a conservative. You cannot vote to invade Iraq, Afghanistan, etc. for no reason and call yourself a conservative. That's absolutely ridiculous, in my opinion. I understand why you're saying that, but in my mind, it's like, what Republican didn't vote on that? At the time, that was not the way things were, okay? At the time, this whole anti-interventionist, keep to ourselves thing that there is on the conservative side of the aisle was not a thing in the least bit. There was hardly anybody in the Republican Party, even amongst the base, that would have said, oh, we shouldn't do those things, okay? And if you were a nut job, or you weren't really a Republican. So to turn around and then to come in and say, oh, but back then Ted Cruz did this, but then it was like, but that was what it was. He was conservative. He's always been conservative. He's always been on the conservative side of the aisle. It's just that the conservatives' position on this is different than what it was before. And the reason that the conservative position on this is different is actually kind of really silly, is, in my opinion, really silly too. It's because of Ron Paul. This is because this group of people that are, were pro Ron Paul really tried to take over the Republican Party. And then when Donald Trump ran, he kind of tried to appeal to that group of people and try and get them into his coalition. And then the Republicans turn into anti-interventionists, when that has really, since Ronald Reagan, never really been the conservative position. It was the conservative position like prior to World War II, but after World War II, nobody had that position, right? So to give that as the single reason that he's not a conservative, I think is a little ridiculous, to be honest with you. He knows what he's doing. You dude went to Harvard. See, Dave Velke says he's a conservative lunatic. See, like, this is the funniest. The left does it too, right? We all think that Ocasio-Cortez is a far left-wing lunatic. And then there's all of these people in the Democrat Party that say that she's not really a Democrat or a liberal or whatever it is. She's not actually far left. Then they'll say that stuff with a straight face. And why do they say that? Because she disagrees with them on one issue, or she went with what was the popular conventional wisdom at the time, and now people think differently, right? I think it's a little bit too simplistic of an approach. Yeah, anti-invention, no, well, not exactly, right? Anti-interventionism was a thing in like 1920, and Republicans were on board with that in 1920. But then what happened? The Democrats controlled the country for like 20, 30 years and won World War II. And nobody in their right mind after World War II thought, oh, the United States should have just kept to themselves. The lesson of history that the world took from World War II was that when madmen go and start invading countries, that you need to come in and do something, that you can't just isolate yourself from the world because it does end up affecting you. That was the general position after World War II. Okay. And that was what almost everybody believed all the way up until after the Iraq War. Okay. There was only like 5 people, right? There was only like 5 people that voted against Afghanistan, right? And they were all the crazies. They were like Bernie Sanders and Ron Paul. Not the crazy. I shouldn't call them the crazies. The fringes, right? Okay. This position now that the Republican Party is anti-interventionalist, that may be the case. I don't know if you polled them that it would be like the majority of them. Like, that's the thing, is it's not like 95% of Republicans are anti-interventionalist. It's not the case. In fact, I'm not even sure if it's the majority of them. So to come in and say that anybody that's anti-interventionist is not conservative, this just doesn't even match up with what the conservative base even actually believes. But it is more popular than it was when I was graduating from high school. Yes. I think AOC secretly worships Cuban revolutionaries because she's Hispanic. She barely hides it. Well, I can't pretend to know what's going on in her head. She sure seems to me like the useful idiots that communists talk about, yeah. Because on one hand, they're like, well, we're not communists, we're Democrat socialists. But then on the other hand, it's like, I don't see how you think that what you're proposing is going to go any other way other than implementing communism, tyranny taking place in the United States, and the whole country going to pot because communism doesn't work. I'm an interventionalist if we're going to seriously intervene and win. I don't like quagmires. I wish it was that simple too. I agree with you on that point. But the problem is that, number one, when you go in, you don't go in with thinking that it's going to be a quagmire, right? But the quagmire is actually a bigger issue. The issue isn't that like there are certain. I think the conventional approach to this is, well, you don't want to go into Afghanistan because they have all of these cave systems and everything. And so no matter what you do, there's always going to be this opposition that's going to hide from you and you're just going to be stuck in there forever. That's like what the layperson believes, right? I think the reality of it is that the United States is not very good at rebuilding. So like the best example of the United States being successful at nation building is rebuilding Europe after World War II. But you're talking about, an area that had already essentially been industrialized, right? And they did it, they rebuilt it all themselves, and all the United States did was provide the money. The United States is really good at providing money, right? Too good at providing money, right? Because then when you go into like Afghanistan, right, the United States provided all of this money that just got wasted and just got spent on corruption, right? The United States hasn't been able to rebuild nations and to get the support of the populace behind them and get the people to say, oh, the Americans are doing good things and we're going to root out these terrorist elements in our society. They're never able to get that public support. And this has been time and time again: Vietnam, Afghanistan, Iraq, and basically anywhere else that the United States gets involved. We're poor at nation building because we just try and throw money at it. And instead of creating that trust, we just create corruption that in turn sours the people against us even more. That's why that happens. So if we want to fix that, we need to come up with a better strategy for nation building is what we need to do. We need a better war doctrine around nation building. Yeah? I don't know. That's one that I hope you guys go and think about, because obviously it has absolutely no implications to trading, but it's something that I think is not a common opinion amongst people that really truly narrows in on the problem, and it's a problem that we can solve. And so I really hope that this opinion becomes more widespread, that we need to learn how to do nation building effectively. No, I don't think that the United States wanted to create a colony in Afghanistan. I breathed in some water. You can't nation build when it's a tribal society? Maybe, maybe not. It's interesting. Go and find the people that were there in Afghanistan and were involved in trying to do the nation building and see what they say about it. It's really interesting. But you certainly, I don't know if it has anything to do with the tribal society, but I'm just saying you can't go into this place where there's been a lot of corruption and so forth in the past, and then expect to just throw a ton of money at it and then they'll just all build stuff and everything will be hunky dory, right? Because as far as I can tell, you know what, I think it's even more clear in Vietnam. When you look at when they left Vietnam and how that all went down, the United States gave their support to regimes in South Vietnam that really did not deserve our support. Like seriously, some of the people that were in charge in South Vietnam were batshit crazy. Okay, and then what did we do? We just come in and we throw a bunch of money at it and we buy all of this stuff. And so essentially, like, any economic activity that was going on in South Vietnam was like entirely dependent on US money coming through. And so it wasn't even like they were building their country. It was just they were just shaving money off of the top of the stimulus that they were just throwing at it, and it didn't do anything. It just when you just this is just the same thing with this stimulus here. It's like, listen, Keynesian economics do work to some extent, okay? But you can't just throw money at it. Okay. You got to be smarter about it than that. I think that after 2008, that some of the stimulus that we did was a little bit more efficiently targeted and was smarter than this time around. But in both instances, there was a number of programs that were just completely ineffective, right? You and I think that after the financial crisis, that the lesson that the elites came away with was that stimulus works. And so they thought that that means all we've got to do is throw money at problems and they'll go away. And it's not that simple. Yes, money is required, it's a part of it. But you got to be smart about how you use that money still. You still need to be efficient. You need to be efficient and you need to target your stimulus towards the things that you actually want to help change. Right? And you've got to think about the whole system, because if you only put stimulus in one side, and then you get the supply side issues that we've got right now, right? Are there any pure chart traders in your Discord? Nope. So like, here's the thing. Well, so first of all, I don't pay attention to what individual trades people are making in Discord, to be honest with you. Like if somebody else posts a trade, I don't even read it. So no offense to you guys. It's not like you shouldn't post them or anything like that. It's just that I care about my trade. I'm not trying to follow anybody else, right? What I'm looking for is, I want to share like what the sentiment is out there and what kind of information that we have. We're information sharing. That's what Discord should really be about. I haven't done a very good job lately of trying to curate it, and lead the community down a certain direction, right? It's just some people that randomly found us that happen to share things. And so I haven't really, I don't want to discourage them or anything like that, right? But if somebody comes in and posts a chart thing, I'm just like, who cares? And there's one person that keeps freaking coming back. Like, I'll ban this guy and he comes back. It's so effing annoying. And he wants, like, he believes in Fibonacci and everything like that. And I'll tell them all this stuff that I was telling you guys earlier about fat tails and the statistical consequences of it. And that, the way that you're setting your distribution up is basically setting you up to fail in the long run. You're just not going to see it because most of the data points are going to be over here. These ones are going to be rare. They're going to be rare, but ultimately end up being more consequential to your strategy. Right? They don't listen. This one guy. So there are some people that have come through on the Discord that they appear to have been making a decent amount of money. Like Chewy showed me a couple of, the reason I put him in that elite was because he showed me a couple of statements that were really impressive. But the more that I watched the way that he was trading, even though he was using a lot of stuff and he was pretty smart about it, he was really in the end taking on excessive risk to do what he was doing. And if it ever doesn't work out for him, it could be devastating, right? So, but it's just, the bigger issue here is that there just isn't enough predictive data in what you get out of the exchange to be profitable, in my opinion. Sounds like fun. Some New Squawk is saying a couple of things. I don't know how to convince people of this. I can come through and look at practically any technical analysis chart trading strategy, and I can backtest it over a series of years and show you that it doesn't make money or what the problems are with the strategy. And people still want to try and use technical analysis. Why? Answer this to me. Why do you want to use technical analysis? Why? That's just human nature, Do we want to? We see patterns in the data, and so we want to use it. I just like to commiserate with others on Discord. It's like, yeah, that's totally a big part of why we have it. Anyways, but again, it's the problem with black swans. Just because I can prove that like 100 different technical analysis strategies don't work, I can't prove that technical analysis doesn't work. Well, maybe actually it can, because then we come into why technical analysis isn't very effective. Because when you trade something, you have an impact on the markets, and that arbitrages those trades out. And so it results in a market that is extremely statistically efficient. It looks almost like a random walk, right? Until you really dive into it. But when you're looking at price in particular, it is just diffusive. It just, you can't pull it out. Any little thing that you find like a correlation with another instrument, people are going to trade and try and eliminate that. And that's what causes it to be that way. And so you end up with a market that is more statistically efficient than it is informationally efficient. So from that perspective, that's kind of been my argument. I don't know if it convinces anybody, but my argument is that if there's more statistical efficiency than there is informational inefficiency, why don't retail traders try to go for the informational inefficiencies? Now, the issue is that there's going to be a lot of trade that's just random. Institutions making transactions that they have to do that have no informational content behind them. And you kind of have to be able to avoid those, right? Or know about them. And how do you avoid all of the moves that are just random and only select the ones where you have the edge? That's the hard part, right? That's on Bookmap. It's pretty good software. I don't think that it has as good of a DOM as Jigsaw, and that's why I use Jigsaw. But I also don't think that the Vista chart really gives you any edge that you can't find just from looking at the DOM. I think that it's just kind of a flashy chart that people gravitate towards. But there's nothing wrong with the software. It's still a really strong package. I don't see myself. I tell you what, there's been a lot of packages out there. One of the problems I have, people want me to convert my indicators to a different platform. I might do Sierra charts. But some of the platforms that people have been talking about, they're all Java platforms. And I'm like, I don't want to write Java. I intentionally stopped writing things in Java because I don't like the language. I don't like the ecosystem around the language, rather. There's nothing wrong with the language. It's just, it is what it is. I'd rather use C# in every instance. What kind of money was Chewy making? It was making a few $1,000s. It wasn't anything insane. But like I said, the way he was doing it was he was taking on excessive risk, right? He was coming in and he was saying things like, well, the put call ratio is this, and so I want to fade the market here. And then some piece of news would come out and push the market the other way, and he would just hang on to it. He'd just hang on to it. And then eventually it would move his way. But it was like, okay, yeah, but when this doesn't go your way, you're going to lose everything. So he was taking on excessive risk to do it. Java is so similar to C#. I'm surprised you'd say that. Well, the issue with Java has to do with the way that they manage shared libraries. So in C#, you compile things down to a DLL, and then it can just be used by anything. And they have this whole CLR framework so that you can have something written in C# and something written in C++, and they work together. In Java, the way that their system handles dependencies can be a complete nightmare. Having the DLL management built into Windows is awesome. But in Java, you have to create all of these build systems and all sorts of technical systems around it just to keep your code running. It's just an absolute nightmare. Yeah. And then the whole thing is like, why go through all of that work when C# is essentially the exact same thing? thing, but better, you know? Especially when it comes to trading software, right? Like when I see a platform for trading software and it's written in Java, that is kind of like a red flag to me. I shouldn't call it a red flag, but it says to me that the developers wrote it in Java because that's what they were comfortable with, not because it was lended itself the best to a trading application, right? C sharp, there's some things about C sharp that make it really effective for making a DOM. So it actually made sense for them to write the Jigsaw DOM in C sharp. They have DOMs in C sharp that are extremely efficient, and they made one that's really, really good in Jigsaw. I don't think people realize how difficult of a technical achievement that is. And that's why part of why the Jigsaw DOM continues to be so good compared to alternatives. Right. But really, you probably would rather write it in, like, if I was going to write a platform, I would probably rather write it in C++ or Rust or Go, a low level language, and one that has a lot of graphical libraries for it. I don't know, or something that has a lot of um, good libraries for integrating well with Windows, which again is something that makes the C sharp effective. So I don't know. That's one of the reasons why I haven't really dove into Bookmap so much, because it does seem awfully popular, and the cool chart that they have is awfully appealing. I use astrology for trading, says Big Toasty. Good grief, dude. I think in my next video, I'm gonna tell you the story about the guy that used astrology for his trading. At least when he started trading, he used astrology, but he later determined that it didn't work. I forgot to mention your admiration for MATLAB. Would you prefer that? No. Is the S&P 500 going to break lows here and fall apart? Sure seems like the treasuries sure did a real head fake there, huh? Oh, I almost have to wonder if that selling that happened before the news was on purpose so that they could try and flip it. Right? They can do that. They can make a move in anticipation of flipping the move the other way, because they know that it will weaken the book and make it easier for them to move it and possibly increase the amount that it moves when it happens. It seems, I don't know. I don't know. It's pretty conspiracy theory though, huh? MATLAB is just, jeez. You know what? Here's the thing: is MATLAB is really good at what it was intended for, and most engineers are going to have to use it. I just don't think that your introduction to computer science course for those engineers should be in MATLAB. You should use a regular language, like you should use C sharp, and teach them the basics in C sharp, and then there should be another class for MATLAB, so that you know that all of these things in MATLAB are weird and unusual, you know? Had a physics professor that really liked Mathematica. Yeah, all of those things. R is another one. I really like R. Like, dude, if you're going to do statistics, R is good. Everybody uses Python because it's easy and like there's lots of libraries and stuff, but ultimately it seems to me that R is a better language for that sort of stuff. I think I want to do my machine learning in Python because that's what's popular, but it would probably be better to do it in R. But if I'm going to do that, part of the objective in doing that is to try and make it more accessible to people. So just accidentally bumped my water bottle against the chair there. Anyways, I'm still thinking about the technical analysis thing. Yeah. Like, because the Discord is really open, I don't like try and come in and tell people like, you can't post that here, that site. But I just kind of try and probe them. Like I try and, say a thing here or there to see if they can come to the realization on their own that it's actually random, or I really don't have any reason to believe that this is going to work. That's where it really comes down to for me. That's the thing that thing number one, right? Like, if we're going to talk about the journey of learning trading with speculator Seth, lesson number one, what you're doing probably doesn't work and you have no reason to think that it will. It's not based on any kind of empirical evidence. You just read something on the internet and it appealed to you and you decided to start trading it. That's what the majority of retail trading strategies based on technical analysis are. But lesson number two is that markets are very statistically efficient. So you're not going to find something that's really popular out there and it works, because the more people that use it, the faster they take that edge out of the market, and they just introduce an inefficiency the other way that's going to lose you money. Okay? That's lesson number two. You can't follow other people. Right? So then what's lesson number three? Lesson number three is, what is the actual empirical evidence? And that's going to be the video that we release hopefully on Monday. No, you see, this is my problem. This is my problem. GT says, I wouldn't say it doesn't work at all. I've used it to make money, but in the long run, you're going to lose money from it. Because again, tails. 80% of your profits or losses are going to come from 20% of the trades. And so it's always going to seem like you make money in the short term. It's always going to seem like that at first. If you have a strategy that's actually, a lot of strategies just straight up don't work at all. But most of the time, if you're having success, it's because of that. It's because you're just not seeing the tails yet. Right? And the whole thing is again, why do you think it's going to work? Like, if you use something for a year, is that enough for you to think that it's always going to continue to work? Because that's what most traders are doing right now. So it's less than that. Like, when I read the Reddit, it's like, if they've been trading profitably for a month, then like they've made it and they're a profitable trader, which I think is so hilarious. Right? Because I can think of so many times where we were trading a strategy like technical and we were being really consistent with it for like six months plus, and then just completely crashed and burned, But then it comes back to, why did I even think that was going to work? Well, in my case, I never actually did. I was just giving it a try because why not? But really, we should try and use empirical evidence, real hard data that shows that the market behaves a certain way, right? That's what you would need. That's what you would need for a technical analysis strategy. For us to really want to use it, for it to be really empirically backed, we would need to have evidence that the market behaves in that certain way and that trading it in that manner would be profitable. Now, the problem with that, there's a big problem with that. There's usually not enough data for you to prove that. The number of, because we're talking about power laws, it's like you only need like 40, I think there's something like you only need 40 or 50 data points to approximate a Gaussian distribution to a reasonable degree of error. But in order to approximate these power laws to a reasonable degree of error, you need like, 10 to the 6th number of data points or something like that. So like if you were doing short-term data over like 10 years, that might be enough data. All right. That might be enough data. So we as traders are basically going to be forced to have to make decisions based on a strategy that we can't 100% prove, right? But what we can do is we can find actual statistically proven things about markets, right? Like in particular, the square root law of meta order impact is something that is extremely well founded on data. It's extremely consistent too. It's an extremely consistent rule that when you execute, the impact that you have on a stock tends to follow a square root law. Okay. So then you can build a mathematical model that matches that movement, right? And that's what they've done. It's y times the volatility times the square root of the size of the meta order over the volume. And you can literally, if you're going to execute for other people, you can use that formula to estimate how far you're going to move the stock and use it to quote for them and make money from it. Banks use that formula to make money straight up, right? Okay. So what we can do is we can take a model, we can show that the model is consistent with the market behavior, and then we can find a strategy that will create results in profitable trading off of that model, right? And that's where we get into market making strategies. But we as retail traders, we don't have that many resources. So the best that we can do is look at the empirical evidence, understand the way that the market actually behaves, and then try our best to trade with that in mind. Right? And that is trading with speculators. Oh yeah, and markets are more statistically efficient than informationally efficient, so you're going to be able to find a lot of edge in information. But there's still going to be a lot of randomness. And in the end, that's always going to involve taking on a lot of risk. And you're probably not going to make money. But that's okay if you enjoy it. Yeah, I see why nobody believes me, because it's once you know the truth, it's not really exciting per se. It's kind of like, oh, so you mean I'm just gonna grind forever and probably not actually see a whole lot of results from it unless I get lucky? Well, yeah, but you enjoy doing it, right? Well, I don't enjoy doing it that much. I don't know. Maybe I wonder if I wasn't streaming, if I would have given up by now. I wonder. NASDAQ Killer believes me. Thank you. But this next video that I'm putting out, I worked really hard on the script and everything. I think it's gonna be a good video. Well, I didn't participate in any of that decline and then rebound in the treasury, but the initial move that happened when the S&P 500 was not something that I was anticipating. And the reaction to the Bank of Canada's decision was not something that I was anticipating. So two moves that I really had no clue about, and I just sat still. I guess that's a good thing, huh? I love it. Look at the last few days, RSI was indicating weight oversold bounce was incoming, and dude, so GT350, would you like to go and backtest the RSI? We can go and do that. We got 20 minutes. Let's do it. Strategy analyzer. Hopefully I don't crash nothing. So here's the RSI is an interesting one. Okay. Let's see here. It will be in oscillators, right? Yep. RSI strat. When I have a super RSI, I don't remember what's in the super RSI. And let's pull the code out. Makes sense what you were saying. It's funny how many people claim to be making a killing from the market, though I know most of them aren't. Well, yeah, because what they do is with the periods where they've made money, they think it's all due to them, and then the periods when they lost, it was just a fluke, right? Using moving averages and trend lines. Well, so here's the thing is that I think that you will see quant traders that will use something like moving averages in their strategies. Is just that like you're never going to see a quant trader that like they just have a series of moving averages and that's how their strategy works and they're making money off of it, right? There's actually some really interesting mathematics behind a moving average that I don't understand that basically means that it would never be effective anyways. What edge do retail traders have over the more sophisticated market makers that use statistical models? Okay, so the one edge that a retail trader has is agility. Okay. The one edge that a retail trader has is agility. So if you know that a meta order is coming, that is, there was just a piece of news or whatever the deal is, and it's, the more amorphous it is, actually kind of the better. Because if you get something that it's like not everybody finds out about it at the same time, not everybody understands it at the same time, but it is going to result in a lot of orders, then that makes it even easier for you to be nimble and take the trade before everybody else figures it out and then just ride the wave. That's the one edge that I think I can confidently identify that a retail trader can have, or that every retail trader can have. You just have to know what's going on in order to do that. You have to be able to make that decision that here's a piece of news, this is what's going to happen, and I'm fast enough to be able to take it. Okay. RSI oscillators. So what is the RSI versus the super RSI? Yeah, it's a super smooth RSI. Yeah, sure. Okay. RSI strat. So if it crosses below 30, then we enter long. And if it crosses above 70, then we enter short. Right? That's the commonly held. You can also do 80-20. We could change that, right? Now you're talking about it on a daily basis. Right? So let's come over here and select the S&P 500 and let's try and go back as far as we can. So I'm going to see if it will let me go back to 2008. I don't think it will let me go back that far. But then we're going to change this to daily bars. Okay. And let's not do break at end of day, but we will include commissions. Okay. RSI, like the RSI that Wilder used was 14 and 3. And we're not going to put targets on it. Okay. So when it gets a signal, it gets in and it stays in. And if you get the signal the other way, it flips. And so it will always be in a trade. Okay. And we run that. Let's see if that will go. See if that will go for us. And we will see in these results that we get here a lot of these statistical properties that I'm talking about. It's really clear in RSI. And once you understand where RSI is pulling its edge from, you might not want to trade it. Okay. Okay. So it did not make money this time. Now look at that. Out of the 12 trades that it took over the time period, so let me come back here to the chart. How far did it actually let us go? Ooh, it's going back. It's going back. Okay, so it started in 2010. It will only let us go to 2010. Okay, so since 2010, oh, the RSI actually went and sold short there on that one. Oh yeah, because there was that too high. Maybe you shouldn't have taken that one. So that we might be able to ignore that one, because if you were to have a larger data series, that might not have been an overbought. Okay, here we go. And what is it doing? Going back to it, is if it's crossing below the 30 or above the 70. So we could change it when it's coming back the other way. That generally tends to help, right? Shall we do that? Cross above the 30 and cross below the 70. And we'll come back over here to our summary. I'm just going to make sure I don't want it to play that song again. I just picked a song that's like, if I'm in the other room, I will hear it, but we don't need it here for the stream. Okay. Oop, there we go. Okay. Oh, I don't think I built it. Never brag about gains. That's probably a good idea. Yeah. Just don't brag at all. I mean, humility really helps in this career, right? This job, whatever you want to call it. Humility really helps in trading, because you got to realize that a lot of it is just random and that anybody could be humbled. Anybody can be humbled. You know, like when I rag on people like Kathy Wood, you know what? She's been in the fund management game for, you know, that she's like 66. Yeah. Anyways, she probably, a lot of the decisions that she's made lately have probably just been like, they kind of hit gold and they're just trying to make as the best of out of it as possible. I don't know. Okay, so here it went. That's a little bit better. Okay, so notice here, for instance, during the COVID crisis, here RSI went oversold, and we weren't even through like a quarter of the crisis before it went in. And then it didn't even try to buy. Oh, that's when it tried to buy. And then it got oversold here on this. Okay, so like this is a perfect example, right? So you see that? Okay, so we were oversold. We were below 30 at 3,100. That wasn't even like close to the end. And then it became oversold at 3,200 and we exited, and you actually made money on that trade. Do you see that? Do you think that that was a good trade? Even though it made money? No. Do you think that you'll be able to hold that degree of a drawdown with your retail trading account and leverage and everything? No, probably not. So let's come back to the summary here and start to look at it. Okay. The largest winning trade made $11,000. The largest losing trade was $58,000. Let me read that again. The largest winning trade was $11,000. The largest losing trade was $58,000. Now, look back up at the top. Total net profit, 49,976. So this strategy is literally unprofitable because of one trade. It is literally because of one trade that this total net profit is negative. Do you see that? That tells matter when you're doing that, right? Okay, so if we come back to the analysis, you can kind of sort to see this sort of stuff, right? Would have been great until recently, actually. It's interesting. But what I want to look at is like maximum favorable excursion, or no, adverse excursion. Okay. So there's this one, look at there. That's the one that we were just looking at, right? They made a little bit of money, but it went $46,000 against them first. Right? hmm There's a couple of these ones over here that are profitable. They tend to be profitable right from the beginning. That's just kind of statistical noise. Right? So do you see how it can fool you? Do you see how it's like it will appear to work, but then in the end, is there actually any edge in it? Well, there's nothing in any of this data to suggest that there is an edge in it at all. Like I said, TA is used with other information. So what? Just here's the thing. Okay, so if you use TA with other information and you make money from it, how do you know that the TA was contributing to your profits at all? The profits might have been completely due to the other information and had nothing to do with the technical analysis. How do we prove that the technical analysis actually works? Right? So here's what I say. The technical analysis has to prove that within a certain risk reward ratio that it's profitable over a large enough data point, right? This is why I say number one is if you can just show equal risk reward that it tends to go in your favor, then you have something that's predictive, right? You have something that's predictive. Can't find them. I've actually made some that are like 55%, but I don't have enough data to really know if they actually work or not, right? Like those are order flow level ones, and like I can do an order flow strategy and get like a 55% win rate on it over the 1 or 2 years of data that I can do. But in order for me to really prove it, I would need like orders of magnitude more data points. So I need to go back like 10 or 20 years, and I don't have that data, so I can't prove it, right? But we have to suspect that if we had more data, that those data points might show up and it's not successful, right? And we kind of, again, we will kind of like, one of the things that will screw up is we'll think, well, because I have a set stop and target, right? I'm not vulnerable to those fat tails, but you are, because you can still have a series of trades that can be considered a fat tail, right? Like you could look at how much money you make per day, and there's going to be a day that you lose so much money that it, washes out everything else, for instance, or a week or a month or whatever it is. Okay. How do we need to have a reason to think that there's an actual edge in TA. The other one of it is that we might not be able to prove that this thing happens more often than not, but we might be able to prove that when it does happen, that it goes further than when it doesn't happen, right? That's what I think you really want to be looking for. And then how do you prove that? So like if I come in here and I can say, I just have a target that's further away than my stop, but you know what ends up happening when you do that is that the probabilities just come out to be random, essentially. You have a target that's further away, then you'll get a certain win rate, and the stops will be larger, and in the end it still comes out to break even. And this happens like no matter how you change it around. And people will tell me, well, yeah, but I hit higher than that. And I'm like, well, that's just because you haven't found the tails yet. Unless you really have like 10 years worth of data showing that it behaves in this way, right? Which you don't have. Then it's not proven. So if it's not proven, then why do you want to believe it? You have some other piece of information that suggests that it could work, right? Because the way that I trade, I can't prove that works necessarily. I mean, it's like discretionary. So how are you going to do that, right? But I have research. I have empirically backed research that says that the market behaves in a certain way. And I'm basing my strategy off of what we know is proven about the actual market. Whereas most people, they're just going off of something that they read and it was appealing. Like, really ask yourself, why do I want to use this thing? Why do I believe that this thing works? Because you know that you can't prove it. If you could prove it, you would just show me the piece of data and be like, oh, actually, you know what? RSI is a really good strategy. And here's this research study with 10 years worth of data that proves that it has a considerable amount of edge and that you should use it, right? You're never going to find that. You're never going to find that because technical edges get arbitraged away by the market. And if there was really strategies like that, people would have published it by now. And that's the thing, people have published things about stuff that works, like correlation-based arbitrage, for instance, market making strategies, things that most retail traders can't do. You were 95% cash when COVID hit. Yeah, but what does that have anything to do with the technical analysis? You prove that that happened because of the technical analysis or because you knew what was going on? Or that you were lucky because we're talking about one trade. You guys, you got to think about this from the position of like, if I was going to write a paper and I was going to submit it to one of the top 5 economic journals and it was going to be reviewed by like 20 different people and they were going to poke holes in everything that I had here, what would I actually have to say to be able to prove it and get it published? You know what I mean? And if you have that level of that high of a bar before you want to say, I'm even going to trade it, none of us would be trading. It's just, you know? So I'm just telling you, next best thing. Take the research that does exist and then try and make a strategy off of that. I don't know. But you know what? It's probably time for me to get going. But I'll be back. It's only going to be, what? 5 hours? Yeah, 5 hours here. That usually doesn't seem like very long. This FOMC should be fun, guys. So I will see you guys then. The event is already up there, so you should, if you're subscribed, click the bell icon. You should already see it. Make sure if you're new, subscribe, hit the bell icon. Bell icon really is a really useful tool for this channel because you're going to want to see future stuff. And check out the links in the video description. We got like a discount codes and stuff like that you might find useful. All right, so I'll see you guys in 5 hours, and in the meantime, stay profitable, friends.